afternoon, traders. This is Tony D from easyMarkets in the Sydney dealing room. Update for today: we have a fairly range-bound market so far. You did see the US dollar strengthen again overnight, especially against the euro. A lot of the strength at the moment actually being led by the euro. Nothing too crazy as last week, but definitely a grind lower. Little rallies that you're seeing, little bounces are getting sold off pretty quickly. Now this is happening across the board as well with the pound and to some degree also the Aussie dollar, which is currently sitting just underneath the 75-cent level. Now the Australian dollar wasn't helped out by the retail sales numbers, which did miss, coming in flat versus 0.2 last month. And so what we're looking for is some of these support levels to be tested again. So it's already getting tested in the euros at fresh lows, but the Aussie dollar, you can see that the low that we got to on the spike lower was 74.70, and a breakdown below that does open up some bigger levels. So you're looking at low 73s as the main numbers that are being bandied around. Market bounced off that a couple of times, and then below that, then you see the next support that was tested a few times was down towards the 71.50 level. And so that could be, if we're talking about extension levels in the coming months, then this is where you could see the Aussie dollar trading at. Now what's going on with the US dollar being so strong, and why is there no two-way action at the moment? Why is it so relentless? There seems to be a bit of a theme developing that global growth is slowing down, and all the central banks will be lower for longer, with the notable exception of the Fed, which is on the rate hike cycle. So creating not just a tactical US dollar short squeeze from the US yields rising with the rest of the market on hold, especially Bank of England, but maybe a more medium-term US rate outperformance, and that could lead to a bit more of a US dollar trend. Now it doesn't change that the long-term high for the US dollar is probably in, and euro is not going to go back towards 105 unless there's actually an issue in the eurozone. A slowdown's not enough for that, but a delay of rate hikes in the UK, in Europe, and Australia, and New Zealand, and Canada, or until next year, would sort of open the door for a bit of a longer-term US dollar rally, a medium-term US dollar rally that does surprise a lot of market participants, because of the general feel that if the high is in the US dollar, that it's just a one-way street from there till we get to the low for the US dollar. And so if you're looking on the longer time frames here, then you're looking for the dollar index to get back towards some of the more comfortable levels where it's been a lot of 2015, 2016. Now this does put the euro back towards 115, and the pound closer, in the short term anyway, closer towards 130, and the Aussie dollar closer towards 70, if that was to be the case in the next few months. Now it's definitely just an idea at the moment, but it's sort of the first one which I've heard that makes a little bit of sense as to why the US dollar's outperformance is not a short, just a quick positional adjustment. The surprise and the fact that the market hasn't bought the dip on the euro or the pound aggressively, and that there's been just relentless grinding lower, is sort of symptomatic of a market which has got a bigger move coming, and that's the danger here. So those positioning themselves for the Aussie bounce or the euro bounce or the pound bounce have to be open to the idea that this US dollar rally isn't over. And definitely the previous high is 94 to 95 on the US dollar index. Would see the majors significantly lower than they are now, and is probably a better level to be drawing a line in the sand and sort of looking for that longer term US dollar downtrend to resume. Alright, so we'll see how that develops this week, but I thought it was of note, and that's why we brought it up today. What is driving this US dollar at the moment is just that the global growth downgrades and the lower for longer feel coming through from all the central banks.